Well, good morning, everyone. Thomas Montgomery. It's a beautiful Friday morning. Today is October 17th, 2025. We get together most weekday mornings at 8 o'clock Central, talk about strategies, tips, techniques, share success stories, and support each of you. We have a special presentation today where we're going to do a highlight of one of our preferred lender partners. So we have the screen shared here. At the top, we have our basic resources. If you know someone that's looking for funding to start or grow a business, real simple, takes four pieces of information to get started. First name, last name, email, phone on entrepreneurstarterpack.com. For those of you that are distribution partners, all of you should have a landing page that looks just like entrepreneurstarterpack.com. If you do not, please text us and we need to get that to you right away. Our website's 509pacific.org. We post 99.9% of our past trainings up on YouTube. And if you need to schedule a call in terms of who we are, we're a 501c3 nonprofit. We've applied for a grant. We've received a grant. There are three mandates, three things that we need to be doing. And we invite you to collaborate. If you want to be a distribution partner, we can do these things together and you can earn an adult income. First thing that we need to do is improve financial literacy. And this is crucial. So many people don't know what you know. And because of that, they're stuck. They might need money, they might want money, but they just simply don't know how to have a fundable business. They don't even maybe know that a fundable business is a prerequisite for getting business funding. So I'm so thankful for so many of you who are out there educating, whether you're doing it in person in your community or online. Take Star Maine and Troy and Rod and Mark and Kenneth, so many of you, John Stockton, are out there teaching and educating, and that's what really starts it all is empowering people with knowledge. The second mandate is providing free shelf corps. We give those away. Why? Because it's easier to do a capital raise off of a clean entity than one that has issues, simply put. And then ultimately, we want to take that knowledge, those shelf corps, and go put money in their bank account, put money in their pocket. So that's in brief what we do. Our agenda today is to go through one of our preferred lender partners, Bank of America. At any time you have any questions, comments, concerns, type it into the Q&A and we'll get to it as we can. I will share with you at permission to use the content from Bank of America if and all of it is pulled directly from their website. So these aren't statements of opinion, they're not marketing, they're not made up. All of the information from Bank of America is from Bank of America. Bank of America has a real strong push on a special type of funding that not everyone's familiar with. And I know many of you are, but a lot of people, if you went out and surveyed what is an ABL, what is an asset-based loan, I don't think most business owners can answer that question. Well, that's a shame because this is one of the best types of funding, and it's made available by a number of lenders, including Bank of America. So let's talk about asset-based lending from the view of Bank of America, not from the view of me or you. These are Bank of America's words. So Bank of America says, if your company is seeking financing solutions of 5 million or more, so notice, I'll pause for a moment. ABL is not meant for little deals. Now we have other lenders that'll go down to 2 million and even a few that'll go down to 1 million, but ABL is meant for bigger deals. And I look at many of you, and that's why your commissions are so high. Many of you have decided not to dink around with small deals. You're looking for big capital raises. Take Eric, take Corinthian, take Doug. Most of you, I don't even think will talk to clients if they don't want at least 5 million, because that's the sweet spot of this type of program. But let's continue on. If they're seeking 5 million or more, they can benefit from the flexibility and versatility of an asset-based structure. Whether you're planning an acquisition, in a turnaround situation, need a larger, more flexible financing solution, Bank of America Business Capital meets the needs of businesses through US, Canada, and Europe. So it's not global in the sense that they do ABL everywhere, but they do ABL in the US, Canada, and Europe. So again, all this content's coming directly from Bank of America. This is not me pitching you on something. So let's continue on. What else does Bank of America describe? They describe how it works. It states that asset-based loans, ABL for short, can be either revolving lines of credit or term loans. So they could be either or, that are structured by the borrower's assets. How much credit a borrower can access is primarily determined by the quality and value of their collateral, which can be AR. Now, it can be other types of things like inventory and equipment, but mainly what we're seeing with ABL is using accounts receivables. Now, if you're new to our call, you might say, well, that sounds great, but what if my client doesn't have accounts receivables? How's that going to work? Well, we can actually provide them the accounts receivables. And that is part of our problem solving. So you and I, we want to educate people, and then we can also, educate people, and we can also empower them. We can provide them the tools, the resources, or in this case, literally the assets to be able to go after types of funding that they might not otherwise. And we've had other discussions on ABL, asset-based loans, and you can access those up on our YouTube channel. It's just today's discussion is not about us. It's not about how we help clients with ABL. It's the validation that lenders are aggressively looking for clients to loan money to through ABL. Okay, so we covered how it works. Let's scroll down. Well, I guess we have more to go on how it works. So Bank of America further says, with ABL, a lender will instead focus primarily on the value of your business assets. So I guess I truncated this, but essentially what they were saying is that, normal business loans has very broad underwriting, and it can be difficult to qualify for. But with the ABL, they're focused in, they're narrowed in primarily. Again, this is a quote from Bank of America, primarily on the business assets, which typically will be accounts receivables. And if they don't have the receivables, guess what? You and I can provide them to them. Furthermore, with ABL, a broad range of your company's assets ranging from accounts receivable, real estate, even brand names and intellectual property can serve as collateral, unlocking needed capital. If your business has substantial assets, ABL can provide access to significant financing with a covenant-like structure, offering a level of flexibility that might not be otherwise available. So what does that mean? Let's say that you and I were helping a client get an SBA loan. So SBA and ABL are different, but let's compare and contrast. So if you and I were to help a client get an SBA loan or traditional business loan, we would need to put together a uses of funds that breaks down what the client is going to use those funds for. And that's an important part of how the lender decides, are they going to loan that money or not? What this is in essence saying here is ABL is much different, since the loan is primarily predicated on the asset, the accounts receivables. Then they really don't care how the money's going to be used. It's not restrictive, it's more flexible. That's what it's trying to convey, and that's what it states. So then I would have said what it's used for, but again, we're pulling directly from Bank of America. So what Bank of America says on their website, which you can go to, is it can be used for working capital, acquisitions, turnaround financing, capital expenditures, debtor in possession financing, growth recapitalization, refinancing, restructuring, buyouts, or leveraged employee stock ownership plans. So lots of different things. I see Eric has a question. Can it be used for real estate? Sure, that falls. So really, there's not much that it can't be used for. That's why we say when it's unrestricted in general, it's unrestricted. It can be used for whatever the client wants. That's much different than normal SBA or business loans where they're really digging into what's this money going to be used for and is it permissible or not. The main contact at Bank of America is Seth. If you've never talked to Seth, great guy, you can email him. But if I were you, I wouldn't necessarily recommend contacting Seth unless you have all your affairs in order and we can facilitate the financing. But if you do want to reach him, my recommendation is take him to lunch. He loves prime rib. Take him to lunch and get to know him personally. But we can facilitate, of course, the whole application. We have a little graphic. This graphic is also coming from Bank of America. Nothing that we made up. This is not about us telling you about us. This is telling you about one of our preferred lenders and how they do a lot of ABL loans. So the graphic says companies that can benefit from ABL, the characteristics are those companies that are asset rich balance sheet. Well, what does that mean? Well, they need to have assets, right? An asset-based loan and ABL is predicated on assets. Well, I realize that you may see a lot of clients that don't have a strong balance sheet. So how do we fix that legally and ethically? We transfer assets to them, a true bill of sale, a true transfer of ownership. Now their assets are strong, their balance sheet's strong. They have lots of accounts receivables. How can that help? Well, we've talked about it and it's highlighted multiple times. They're fine with businesses that don't have the normal cash flow, which is the second check mark here. So again, if we went for an SBA or a normal business loan, they're going to pay a lot of attention to how's the business doing financially, how are the deposits, is it consistent, whereby ABL is not as restrictive on that. And then to me, it's kind of obvious, it's a great fit for companies seeking capital. Their examples seem remarkably broad, but I guess what they're trying to convey is, in addition to the money being used for just about anything, because it's unrestricted, just about any type of business could use it. Manufacturers, distributors, wholesalers, retailers. All right, I'm going to make this a bit smaller, and then we're going to dig into the questions and comments that you all have to see how I can assist you. All right. Hope is asking about the reseller program, which really isn't our topic today, but you're correct. If you are interested in being a distribution partner, you can go to our website, and there is on there towards the bottom a link, and we can get you set up as what we call a reseller. If you wanted to become a reseller, we provide the free landing page. It'll look just like this. We'll build up the drip marketing. We've had trainings on that recently. You can go see on the YouTube. So yes, if you're interested in being a distribution partner, you will simply go to our website, review the information, complete that form. It's called a license agreement, which means we're agreeing to allow you to use our programming. It's a white label, private label approach. So when you're going out to the marketplace, you're going under your branding. You set your pricing. Anything above the base cost is your profit, and you can make as much profit as you want on the front end. And then it also states that you'll make 5% on the back end. All right, so Donald's bringing up a good point, which kind of dovetails off what Hope is bringing. So that's right. So if you were facilitating this and you brought a client in, you got them one of the free shelf corps, which is part of what you do. We call that phase one, and that we cover that in yesterday's training, you can see. Then we'll work with them to determine what type of funding mechanism is best based upon the client's wants, needs, and mitigating circumstances. If it is in fact an ABL, that's fine. We do all the background work. We'll help transfer the assets. We'll get the financials put together. We'll facilitate the financing. And as Donald's mentioned, then you get 5%. So yeah, if a client's getting a 5 million, I'll quiz you. So anyone, not just Donald. If you referred in a client and they got a $5 million ABL and you make 5% of the capital raise, what would be your commission? This is for everyone. Go ahead and type it into the Q&A. What would be your commission if you made 5% off of one client that went through Bank of America and had a 5 million capital raise. Can you type that into the Q&A? What would your commission be off of one deal using those assumptions? So you've gone to our website, you've gotten set up as a reseller, and we have referred in one client, and that one client went through Bank of America, did the minimum, because the minimum is 5 million. They'll do more. Now, again, we have lenders that go lower. Yeah, so Donovan, you got it wrong. No offense. Carlos, you got it wrong. No offense. But several of you got it right. It's 250,000. So is it get rich quick? No. And I know for a lot of you, 250,000 probably doesn't even move your needle. But that's not a bad commission for one deal. For one deal. What if you did that once a month or once a week or a couple times a week? I mean, that's the potential. It comes back to this education. And I don't want to get sarcastic or angry, but some of you are so damn smart and so damn successful that you're not frankly willing to go out and educate people. But if you can educate them, help them know what you know. Take Alicia. You know, if you could go out and educate 10 entrepreneurs this week, I bet at least one of them would do this. Doug, you're one of the smartest guys I know, but when's the last time you've gone out and educated someone about how asset-based lending works? You know it, Doug. You've probably gone through it, but they don't know it. So I don't know what else to do but to try to just plead with you. If you'll educate people, number one, you'll feel good about yourself. You're helping them. But when we're looking at potentially off of one deal, $250,000 in your pocket, is that not fair? Is that, and I guess that's the question. Is that not enough to motivate you? Is that the problem, that as a nonprofit we're just not able to give you enough economic rewards? Is 200, so it's the second question to each of you. Is 250,000 per deal fair? Is it enough? Or is the issue for those of you that are not out educating, is it just 250,000 is not enough? So let me know. France, you've not brought in any new clients this whole month. Is it because 250 is not enough? Jeff, you've not brought in a single client. Not trying to call out people. I'm just trying to figure out, is that the problem? Is 250,000 just simply not enough for you to be willing to educate people? Mr. Harris, you're a client and a distribution partner. Mr. Harris, no offense, you've not brought in one client this month. Is an extra 250,000 not worth it? So it's okay if we can't meet your income needs, but to me, $250,000 for referring someone in is not a bad deal. All right, so let's see what other questions, comments we have. Terry is referring back to our training yesterday, which is fine, so it's not displayed on the screen. We talked about phases 1 and 2. Phase 1 is getting them into the shelf corp, and that's what you do as a reseller. And then phase 2 is when we work with them for the capital raise. And Terry seems to be asking, well, I'm reading the question, in what form will the funding be? Well, that's what we said, Terry, right? ABL is going to either be revolving lines of credit or term loans. So did I miss your question, Terry? All right. Alicia responded and she said, yeah, that 250,000 is fair. Yeah, to me, I know a lot of you are big hitters, but an extra $250,000, I don't want to keep harping on that. That's a good side income. Let's see. Johnny's asking a question about the client's entire cost, and I love that question. And we had a prior training on it, but I'll mention we've designed a program that theoretically, by design, by anticipation, once the client has paid you, Johnny, or any of you that are resellers, for the participation, the processing fee, which you determine for the shelf corp to be transferred. once they've paid you for that, the goal is that they have no more cash outlay. Well, how is that possible? Because we deliver the shelf court to them in 7 days, and that's that same email that we're delivering the shelf court documents. We're literally taking them into funding for their first tranche. The typical client gets 10 or more cash offers, could be 10, 20, 30, 40, 50,000. So they have enough for working capital, seed capital to go through the process, and they don't have to ever come out of anything out of pocket. And they've even been able to reimburse themselves for that processing fee that you charged them up front. You're determining that. So that's the design. Now, could we go off path if we have a client that doesn't meet the normal standards, they don't get the normal offer? Sure, but we have to build for the masses. So for most people, the only out-of-pocket cost they should have is whatever you choose to charge them as the processing fee when you're transferring the shelf corp. And if you need more background on that, again, you can go on the YouTube, see our past trainings, or just simply go to 509pacific.org, scroll down, fill out the link, get set up as a reseller, and all that'll make more sense. Okay. Any other questions? Uh, okay, Doug's working 66 leads, which is good. And so, Doug, of those 66 leads, how many of them have you educated? Not how many have you tried to sell, but Doug's got an issue. He's got 66 hot leads. And so now I'm following up with Doug. Doug, how many of those have you educated? Because again, I'm not harping on Doug. Doug's Mensa type smart. But most of you, you know so much. You know about ABL. You know how it works. You've gone through it, or if you've not gone through it, you should. But these people, they don't know what you know. And so I think it's real easy for some of you to get frustrated why clients don't all or prospects don't always become clients. Well, we need to educate them. We need to educate them. And that's really your role, Doug, is to go educate them. All right. So with that being said, we try to wrap up early on Fridays. So in summary, if you don't have your landing page, you don't have your drip marketing that we now provide free through the what we call the ESP reseller, let's fix that. So you're able to help people. And the drip marketing actually educates them on ABL. So we take a lot of the lifting off your shoulders. Just go to 509pacific.org, scroll down. You'll see about becoming a reseller, a distribution partner. Fill that out, and we can get going. All right, with that being said, if you do need to reach out to Seth, you can reach out to Seth, provided you his information, and we'll see you all back on Monday morning, 8 a.m. Central. Thanks, everyone. Have a great weekend. Let us know how we can help. Bye-bye.